Inheriting real estate in Canada, your ultimate guide. Inheriting real estate. It seems like a windfall, a stroke of luck. But in the world of personal finance, nothing is ever that simple. Dealing with the emotional toll of losing a loved one is overwhelming enough. But inheriting their real estate adds another layer of complexity. As more and more people find themselves inheriting property and assets, it's crucial to navigate the intricacies of inheritance tax laws. Welcome to Canada, where there are no inheritance taxes. But don't be fooled, my friends. There are still taxes lurking in the shadows. Let's unravel the complexity of Canadian inheritance tax laws, shall we? When someone passes away, the Canadian government treats it as a deemed disposition. They think your loved ones disposed of their properties just before their demise. Inherited properties are often considered tax-free, especially if it's the family home. But wait, there's a catch. If your parents leave you a secondary residence or a commercial property, buckle up because you're about to take a ride on the capital gains roller coaster. Capital gains, my friends, the profits you make when selling assets. Inheriting property means understanding these gains is crucial. Selling inherited properties. Well, get ready to face the taxman. You see, 50% of the capital gain is subject to taxation. And if you thought commercial properties were safe from the taxman's clutches, think again. Capital gains from those are taxable too. Calculating the capital gains can be a nightmare. The purchase price may be a mystery. So, get ready for some detective work. But fear not, my friends. While Canada may not have an inheritance tax, there are still factors to consider. And you better file and pay the appropriate taxes based on your income tax rates. So, how do you navigate these roads of inheritance? Pay close attention. Step 1. Get an appraisal. Preserve those old records. They'll be your lifeline in this game. Step 2. Pay up, my friends. If you inherit a secondary property, get ready to hand over a chunk of that profit to the taxman. Step 3. Selling the property. Brace yourself for that 50% capital gains tax. It's a bitter pill to swallow. Step 4. Plan ahead. Keep those appraisals organized. Stay on top of the tax requirements for future transactions. Step 5. Maybe you're thinking of renting. Well, be warned. There are capital gains tax implications there too. Now, let's address those burning questions about inheriting real estate in Canada, shall we? Do you pay taxes on inherited property? What about capital gains? Do you have to report the sale? How long can you keep an inherited house? Are inherited assets on your tax return? And how the heck are those capital gains calculated? The answers are out there, my friends, but it's not a walk in the park. Inheritance tax laws are a maze, and you need a guide. Consult an accountant, seek personalized advice, and stay up to date with the ever-changing regulations. And if you're feeling overwhelmed, don't go it alone. Enlist the help of experienced property managers who can support you on this journey. Master the art of inheriting real estate in Canada. Make informed decisions for your future. And remember, my friends, knowledge is power. So, go forth, conquer the world of inherited real estate, and may your financial future be ever in your favor. Clicking the link below will take you to our detailed blog on this subject.